Welcome to the channel, everyone. My name is Andre, and I'm here to help you guys with my perspective on analysis across the market, try to make sense of where we're at in things right now, at least my opinion at this moment. So why might I be calling this video emergent? So I just happened to see this afternoon the same thing that I saw about a month ago, pretty much, yep, 2-3 weeks ago, when I saw the potential top where we were. And my main indicator to tell me so was this coin Kyber Network and Luna, which we all know what happened to Luna, negative 100%. Unfortunately, I didn't short that one, but I did short KNC from the very top. I stopped around $3, so there was obviously more downside that I could have taken advantage of. But I was pretty happy with the trade. I didn't utilize too much of the funds, but it was more of a fun, historical trade. It was great profits. But what am I seeing right now? So I just happened to notice that this price drew all the way down to an 886 line that I had drawn far long ago. I can't exactly tell you when. But we did go back to some historical price action going way back into 2020 when I first started accumulating this coin. Let's have a look back. Oh yeah, 2021. Here we go. Back in March and April of 2020, and then we saw run-ups went as low as 80 cents, 70 cents. But we did just hit that 886 line, and we have seen a reaction. But the important thing right now is that we're bouncing off. We've had a dead cat bounce from that area. We've had an enormous run up really fast in the last few days, over 100%. But we are back at this 0.5 area right here on the Fibonacci chart. So typically that area is where you'll see false bounces that occur after strong downside moves. You get a relief rally, and those can sometimes go as high as a 0.5. And why I think that it's emergent important right now is because this coincides with a lot of the negative momentum going across the market right now. You can see strong downside occurred here the last time we were at this area on May 9th. So this could possibly signal the end of this relief rally, maybe going into the weekend. Of course, it could be invalidated if we can break above these prices. For Kyber Network in particular, it would be $2.57, seeing us break above, hold that as support, and continue on upwards. But we're going to have to see that happen, and if we don't, I think this could be a potential reversal point. We are starting to head into overbought territory on the 4-hour in this Kyber Network chart. There is divergence if we go down to some lower time frames and kind of see where we're at this moment. We are overbought, and the SMACD looks like it's starting to show some momentum going downwards. We're starting to put in some red. So we might just be at the top here. We'll have to continue watching. So I want to go ahead and coincide this with what I've been following on an Ethereum and Bitcoin chart. My last video, I showed you guys a quick take on Ethereum and this downsloping channel that's being resistant to it at the moment. So let's wait for this to load up. Computer's lagging a bit. Okay, here we go. All right, so let's zoom out and have a nicer look at what we're staring at. So I mentioned this downsloping channel that goes back to the beginning of April. Ever since then, I found this. We've been trading within it, and we finally had a fake out, breaking above at the start of May, and then heavy drawdown. And at this moment, we are seeing that as resistance. So on Sunday, we had first touched it. Let's go ahead and zoom in a little bit better now. We had just touched that supply line for the first time, and we saw a nasty rejection. So over the last few days, we again touch it a few more times. So that does seem to be a significant area right there. I just want to let some time pass to see if it continued to hold up, which it has. So again, we saw another double top rejection there, more downside, and that was just until last night. So from that area, let me go ahead and clean this up a little bit so you can see. Let's make this white. Get that there. So from there, I decided to draw a Fibonacci that's pretty much going to tell us where price has to break above in order to indicate, further upside. So I drew a Fibonacci from that peak of price action before it hit this little downsloping resistance that I have. That to the bottom here, and we have a golden pocket that exists here at $2,022. And then we have a 786 and an 886 that are around 2,060 from 2,080. So that price area right there. We did get rejected this morning from the golden pocket, and it's kind of creating a nasty formation right now where it's like we're putting in a lower high. We'll have to see if we break down below these prices, which would be at 1,980. That would indicate that we might see further downside there. This also coincides with a line drawn here that was kind of holding the support for a few days, or pretty much the entire week. And we did break below that last night. And we did just run up to test it as resistance this morning. So at this point, we are rejected. We do have a few lines that indicate some proper areas that we have to overtake in order to see some more upside. I do believe that anything coming up at this point is pretty much a false move until it's invalidated and we break above this down sloping trend line that I have. And that price at this moment would be about 2,065, 66. Breaking above that and then holding this area of support, that would give me more confidence that we might run up. And let's have a look at where that channel line that we've been playing along since April, where that is. If we do get into this area again and we can run up, we could see prices go as high as 2,415. I also like how it coincides with the 786 line that I have drawn from the previous Fibonacci on a grander time frame. So running up to that area and playing along within this zone could definitely be a possibility, but we have a few areas that we have to overtake it first to get there. Let's have a look at. Let's do Bitcoin. Let's have a look at Bitcoin, see where that's been as well. At pretty much the same story. There's been a trend line that I have that it's been holding as resistance for a good week now. As we wait for this to load up. All right, here we go. So yeah, I mentioned this one last week, and we can see this the price still has been flirting with this line, but not overtaking it. We might get a little break above, a little fake out, but then we draw right back down. Same thing here, double tops, breaking right down. So again, we came up to this morning, and we were testing this line, but once again, we've seen a rejection. So that's not giving me too much confidence. I'm still expecting some downside at this point. We did have some nasty closures last night. We have a legacy trend line for Bitcoin around 28,700, and we actually closed below it last night. We closed below, but we did have a relief rally taking us back above. But until we see some price action that breaks above these levels, it's not invalidated yet. It could just be a little fake out relief rally, and we could definitely see some more significant downside right over here. The greater time frames are looking really bad. Let's look at some moving averages on the 3 days. We did have a bearish cross to the downside, which is no bueno, no bueno. We had a 50 moving average that crossed below the 200 SMA. So that's a death cross. Death cross shows bad things happening in the past. We could go ahead and briefly go over that. The last few times that we saw a death cross on Bitcoin, we'll go ahead and jump into some history. Actually, for this, I think we should look at a legacy chart. This one, yeah, we have more history on this one because it takes us all the way back to 2014, I believe, when we saw things like this occur. So let's go ahead and make this easier to see. We're gonna go ahead and get rid of everything except these guys right here. All right. So we can see that prices ran up. We have, our bull runs in the past. This is 2013 right here. But the first time that we saw this death cross, which is going to be this green crossing below the blue, actually I'll just go ahead and get rid of the orange as well. So this is basically the 50, the 100, and the 200. So I'm going to get rid of, actually no, I'm going to leave it because the true death cross, is going to be when the 50 crosses below the 100 and then crosses below the 200 as well, which I believe we're seeing here, but we're seeing that in present time at the moment as well. So this is when the 50 crosses below the 100, and then we additionally passed through the 200, and from there, since that happened, you see an additional 58% downside. So that's in 2014. So if we move forward, fast forward, the next time we see that happen is in November of 2018. So again, that was the top of the cycle there. We start to draw down, get closer and closer to this moving average, and then eventually we had the 50 cross over the 100, and then follows up and crosses below the 200. And once that occurs, we once again see a drop, a downside to 51%. So that's 2 times. We're 2 for 2. Where that thing does not fail when it's when it crosses below. So for just the 3rd time in Bitcoin's history, it has now crossed below once again. So the 50 crossed below the 200 at the beginning of April, which is when we saw that first initial drop from the top, and we just crossed below the 200 about 2-3 days ago. Officially, it occurred at the May 16th close. So just 3 days ago, we officially saw that downside. We are drawn below that area already by about 25-26%. But price could easily drop another, let's go 50% from that area and see where we fall. 50% would take us to $19,000, $20,000. So I would not be surprised if we did have a downside drop to that area. In between time, it would not be surprising either if we had a relief rally to at least test this area's resistance. So a relief rally somewhere up to 40,000, 39.7, 39.8 it looks like. That wouldn't be surprising either. Of course, we would have to get above those areas before we could have more bullish sentiment. But right now, that historical drop is in play, and it did actually occur. So I would definitely pay attention to things over the next few weeks, next few months, because you could be looking at a chance to pull up some Bitcoin at the 20,000 range, and that would obviously be a great opportunity. I also want to show how the 3-day death cross coincided with Ethereum because it's my other favorite coin. And Bitcoin, of course, is going to be the granddaddy, but we can expect even more downside for Ethereum from what I saw in previous occurrences. All right, so it's around the same time frame. If we go back to 2018, we see that once that death cross occurred, from the date that it occurred, we drew down about 66%. That was in 2018. And let's see, I think there was another one. Or is this only the second one? Oh, no, this is only the second one. And we haven't even had the death cross yet on Ethereum. So for Ethereum, we still have until price drops below 2,000. Okay, let's see. All right, so the 200 moving average is still above 2,450. It's sitting there on Ethereum's price action. So we might have a few weeks before price could really draw down and this moving average actually breaks below the 200 moving average for Ethereum. So I would watch out for that as well. Oh my gosh, if it does do so, if we were to do a little too, let's draw down about 60% from that area right now. Let's see where that takes us. These are some low prices. We could drop to sub below 1,000. We could go as low as 892, 900 range. So that definitely is in play. It's on the cards. There's also something else that I found that I wanted to show you really quick. We'll go over it really fast in this video. So if we're on the 3-day chart, I also drew this Fibonacci earlier. It was pretty much going from this peak high that we saw in November, and I drew it down to the bounce that we just had occur in January of this year. So when I did draw that bounce, or I drew the Fibonacci connecting those areas, we see that price action again. It seems like we did a dead cat bounce that ran up to the 0.5, which is what I'm also saying is a scary thing at the moment, because we just saw that happen with the Kyber network. And so I'm wondering if that, again, is a signal that we're topping out, because that is one of the coins that just had the horrific downside, and it's drawn up 100% at this point. So to bounce off of that 0.5 and then start a new downtrend going in the opposite direction, I think that's a high possibility. But we do see that price ran up to the 0.5 area before we saw the retracement. We are just now bouncing off of that 1.141 area. But if these things start to break, I think that we have some downside to some of these areas. I mean, I would be looking to start, gobbling up some really strong possible coins, and that could potentially be the bottom here at the 1.414, which would give us a price at 1,180. I would also be looking at this 1.5 area at $959 for Ethereum. And then you're really going to have a golden opportunity in this deeper golden pocket at the 1.618 to the 1.65, and that'll be the price range of $655 to $570, about $572. So that's just some macro look on the price action here. This is Ethereum I'm looking at. I hope you guys enjoyed this content. If you do enjoy it and you do see some helping you out to some extent, to some bit, please give me a like, subscribe, give me a comment if you need to. I'll be happy to respond. You guys take care. Be safe with this price action right now, and we'll have the next update next time. Thank you.